I think after 5 years of calling attention to this and laying out exactly this problem, this is a time to look into how this risk was created and why it wasn't stopped. And frankly, the takeover of Fannie Mae and Freddie Mac, that marks the official failure of this experiment. But, you know, because of the implicit guarantee there, these institutions could borrow at a lower rate in the market than a legitimately private institution, and this model led to excessive risk-taking by these firms because they didn't have a regulator with the right to look into systemic risk. On September 7th, with their capital base rapidly deteriorating and with leverage ratios 6 times higher than our depository institutions, that's how far they were leveraged, the Federal Housing Finance Agency moved against Fannie and Freddie and put them into conservatorship. Now, while the quasi-public model was the foundation for the troubles that sank these two institutions, weak regulatory authority established by Congress in 1992 failed to prevent the excessive risk-taking that many of us cautioned against. And it's unfortunate that our fears were proven correct. And this episode could have been prevented in 2005 when I introduced an amendment on the House floor to give the regulator the necessary authority, with the support, by the way, of the Federal Reserve that argued for this. Mr. Shays referenced this. We had legislation to try to do this, and we brought the amendment to the House floor to curtail these companies' portfolios based on systemic risk. And my amendment was defeated, leaving the underlying legislation unable to address the grave risk that these institutions posed to our broader capital markets. Now, the 1992 legislation, which established what was then OFAO, for the first time in history placed explicit mandates on the GSEs which dedicated a percentage of their business on 3 specific affordable housing goals each year, and these mandates skewed the marketplace by providing excessive liquidity to the lending institutions, making loans to individuals that could not afford them, and exposed the GSEs to a riskier class of loans. Alt-A loans at both Fannie and Freddie made up 10% of their business. It accounted for 50% of their recent losses earlier this year. So the move by Congress in the early 1990s, the inherent flaw in the government-sponsored enterprise structure, the lax regulations all enabled Fannie and Freddie to take on more risk than they could handle and ultimately led to their demise. And I think Congress's failure to pass such critical legislation over the years, especially since the mortgage industry began to deteriorate 18 months ago, is one of Washington's greatest oversights in recent history. And I'm glad, Mr. Chairman, that we're having this hearing now to discuss it. Thank you.
Thank you very much, Mr. Royce. Ms. Bachmann.